Let me ask you something. Have you ever thought that there was an investment, a holding that you overpaid for, a mistake, a research mistake perhaps, or has every single holding, in your opinion, been either a success or an unproven success where investors just have to wait a few more years to see better returns?
Since the start of April, ARK Invest funds have collapsed by another 40%, and Cathie Wood had a recent interview where she talked about her investing strategy when growth stocks crashed this hard. Basically, ARK Invest will sell out of their lowest conviction stocks to buy their highest conviction ones like Tesla, Teladoc, and Coinbase. So, in this episode, I'll go over which stocks she bought the most of as her funds continued to crash over the last few weeks. Whether you're long or short on ARK Invest specifically, or even just growth stocks in general, this is good data for you to see. I'll talk more about all the different ways to use this info near the end of the episode, including how I'm using it myself. Full disclosure, I'm not a financial advisor, and I have long positions in every stock mentioned in this episode since I'm heavily invested in multiple ARK Invest funds. Your time is valuable, so let's get right into it. Let's start with that clip from CNBC's Exchange Exclusive where Cathie Wood gets asked whether or not she ever makes any mistakes inside her funds. I wonder what she has to say about it these days.
Have you ever thought that there was an investment, a holding that you overpaid for, or has every single holding, in your opinion, been either a success or an unproven success where investors just have to wait a few more years to see better returns?
Yeah, I think a lot of people understand when they hear us talk with such conviction about our stocks, and the conviction is born out of research. They think that conviction translates into perhaps arrogance or hubris, that we can never be wrong. That is not true. In fact, if we make mistakes all the time. If you don't take risk, you're not going to be able to generate the returns. We have taken, since last February, the number of stocks in our flagship portfolio, ARKK, peaked at 58 and is now 35. So there are 23 names that we took out of the portfolio saying, you know what? We're not as confident in our assumptions, or we don't like this management turnover. Management changes we watch like a hawk, and that's why I mentioned those on Teladoc. Mm-hmm. We're very impressed with the talent they're attracting. So no, we're going to be wrong. I'm sure we have mistakes in the portfolio now. And many people would say, well, look at the stock price. It's for ARKK, it's been decimated. It's been decimated. And it's treating our stocks and our portfolios as though it is 1999, when there were a lot of companies that were founded that actually failed. That they were chasing a dream that is becoming a reality right now, and we are investing in that reality.
All right, so let's work through that clip together. No risk, no reward. I think we all get that part. But Cathie Wood said that ARKK had almost 60 different companies in it a little over a year ago, and now it has just 35. So it sounds like ARKK's holdings have a churn rate of almost 50%. That doesn't make any sense given that Cathie Wood always preaches this 5-year time horizon. So I dug into ARK Invest's trading data, and here's what I found. ARKK had 55 stocks in it on April 5th, 2021, and just 35 in it on May 11th, 2022. What actually happened over those 13 months was that around 27 companies were removed and 7 new ones were added to ARKK. But if you look at the top 15 stocks in ARKK from over a year ago, only 3 of them aren't in it today: Zillow, Baidu, and DocuSign. When Cathie Wood talks about her biggest mistakes, these are the kinds of stocks she's talking about. Other than those, ARK Invest's biggest positions have mostly stayed the same. Let's look at the holdings inside ARKK right now. Of the 35 stocks currently in ARKK, only 7 weren't in it 13 months ago. Coinbase, UiPath, Robinhood, Signify Health, Roblox, Ginkgo Bioworks, and Too Simple. That's it. And 13 months ago, all of these stocks had either just gone public or weren't even public yet. And speaking of public, this episode is sponsored by Public.com, an awesome investing platform and social network rolled into one. Public is free to use with no account minimum, no fees on standard trades, and lets you buy slices of stocks for as little as $1. They also have a huge community where they host live town halls with fund managers and company CEOs. I got to ask Cathie Wood a question at one of those town halls. So, whether you're looking for a new home for your own portfolio or you just want to see what trades I make in mine, head over to public.com/ticker-U and you'll receive a free slice of stock worth up to $1,000 when you fund your account. I'll leave a link to that exclusive offer for you in the description below. Okay, let's just think about ARKK objectively. Cathie Wood's assets under management are down 68% from when ARKK had 55 stocks in it. She's so confident in her analysts and their research that even though all growth stocks collapsed by 50%, 60%, 70% or more, ARKK's top holdings have barely changed. A market cap weighted index fund can shift by the same amount in a downturn, like they did when Facebook and Tesla stocks both lost a third of their value. That's one reason I think of ARKK as more of an innovation index, and the active management is really more about keeping it up to date as technology changes instead of just rebalancing quarterly. Whether you agree with that idea or you're shorting it, that's up to you. Here's another thing that you should know. Most of ARK Invest funds have less than a 1% cash position in them at any given time. Instead, Cathie Wood uses bigger, more stable companies as cash-like positions. Each ARK Invest fund has these cash-like positions in them, not just ARKK. Cathie Wood will sell these stocks even at a loss when she feels that her highest conviction investments are trading at a steep discount, like they are right now due to high inflation, the Fed raising interest rates, and the ongoing war between Russia and Ukraine. Not to mention things like the supply chain issues that are still around from the pandemic. These world events have real effects on businesses, not just their stock prices. So if you want to count the stocks that got kicked out of the fund, only about 1/3 of ARKK has changed by weight. While some of them were definitely mistakes, others were put in specifically so that they could be sold for cash down the road. If you want to learn more about these cash-like positions, I've made multiple videos talking about them. I'll link you the best one in the top right-hand corner of your screen right now. In my opinion, Cathie Wood's reputation for being a swing trader is a little overblown when you think about her trades in this context. Speaking of which, let's see how Cathie Wood concentrated her holdings in ARKK down as they collapsed by yet another 40% from April 4th to May 11th where they bottomed, at least for now. Each row is one company, the rows are ordered by the size of Cathie Wood's position in that company, and each position is colored by its change in size since Cathie Wood started concentrating down her funds. From the start of April to the bottom in May, ARKK's assets under management dropped by 33%, so positions colored in green shrank by less than 33%. And positions colored in blue shrank by even more than 33% over the last several weeks. So, for example, Cathie Wood's share count in Tesla is 9% lower than it was on April 4th, and Tesla's share price is also 26% lower. As a result, Cathie Wood is holding about 33% less money in Tesla, which is right in line with the decline in her fund overall. That means the Tesla shares that she sold aren't a big deal. She's just keeping her giant Tesla position in line with the rest of the fund. Let's look at the big trends in this data. Cathie Wood was a net buyer of almost every stock on this list. She sold some shares in Tesla, Spotify, and deployed over 95% of ARKK's cash position to buy the dip on literally everything else in this fund. You can see that her share counts increased by 10 to 20% in almost every position on this list, with a few exceptions. Those exceptions are the stocks that we care about. Let's sort this table by the increase in share counts and add back all of the data through today, so that way you have all the most recent up-to-date numbers. As everything dropped, Cathie Wood increased ARKK's share counts in the following stocks the most: Shopify, Roblox, Ginkgo Bioworks, Coinbase, Twist Bioscience, Roku, UiPath, Zoom Video, Robinhood, Unity Software, Teladoc, Stratasys, Beam Therapeutics, Invitae, and Intellia Therapeutics. Those are all of the outsized buys in ARKK during this latest big leg down. The rest of the fund increased by the same 12-ish%. That's probably a result of the inflows that the fund is getting now that the stocks in it are a lot closer to their bottom. And to buy those stocks, she sold a little bit of Tesla, a little bit of Spotify, and 70% of her cash position, as well as her position in C Limited. C Limited is currently the biggest position in the portfolio I run for this channel, that I try to have compete directly with ARKK. So I have some digging to do to see why she sold C Limited this past week. Remember, just because Cathie Wood sells a stock doesn't make it a bad investment. Think about Nvidia, PayPal, and even Palantir. For now, let's highlight every position she bought more than that 12-ish%. Then we can sort the fund by position size again. What this shows us exactly is the list of Cathie Wood's positions, in order of conviction with the outsized recent buys highlighted. Reading this list from top to bottom shows us exactly where innovation is the most mispriced in the public markets, at least according to ARK Invest research. There are really three kinds of buys here. Stocks like Roku, Zoom, and UiPath, and maybe even Roblox, have the darkest green rows. That's because their prices dropped by about 20%, and Cathie Wood increased her share count by around that same amount. That way, she keeps those overall positions the same size. When I see something like this happen, I start researching the technologies behind these companies to see why Cathie Wood is buying them so much, even when their direct competitors and other innovation stocks have dropped in price by way more. That's why I recently came out with that deep dive on Roku, and you can expect a similar video on Zoom and maybe another one on UiPath as well. Stocks like Teladoc, Coinbase, and Unity Software have the darkest blue rows. That's because their prices dropped so hard that ARKK now has a smaller position in them, even though Cathie Wood bought the dip. Whenever I see stock prices fall by this much, I make sure that the thesis on the company itself is still intact. Was there a shakeup in management? Did a business unit fail? Are they spending their money in a really bad way? Those are the kinds of things I look for. And that's why my most recent Teladoc videos focus more on the company and the financials, and you can expect similar videos on Coinbase and Unity Software in the future. My personal expectation is that Cathie Wood will keep buying these stocks over time as she frees up more cash, for example when Tesla makes its next big leg up, but obviously that's not guaranteed. Every other stock on this list falls somewhere in between those two extremes. So I usually leave those up to my patrons on Patreon and channel members right here on YouTube. Sometimes I organize them by theme and make one video covering a few of them together, like I just did with Shopify, Twilio, and UiPath. That's how this data drives the channel. And currently, when you combine the data for all 6 of ARK Invest's funds, the data largely tells the same story, maybe adding in Shopify. So I'll save you some time and skip their combined funds for now. Comment below if you want me to make another video showing ARK Invest's combined funds data, and I'll add it to the list. But now you're seeing how I use this data to pick what to talk about on this channel. Because my degrees and my career are all in electrical engineering and data science, I know how to present ARK Invest's research to non-technical audiences. And because I've been investing for going on a decade now, I know how to pull useful information out of ARK Invest's trading data and link it back to their research. I've been seeing a lot of spicy new comments on older videos about the timing of my content. So let me be super clear here. Timing the market is a bad idea. Don't do that. Every good investor focuses on companies, not stock prices. Every good investor leaves cash on the side. Every good investor manages their positions over time. This channel focuses on advanced technologies, the companies building those technologies, the funds investing in those companies, and the research those funds are doing to make those investment decisions. No good finance YouTuber waits for a stock to crash to talk about it for the first time. By the time that stock crashes, you should have already done your homework. I absolutely do not care that my stocks are down by 50%. This channel is not for day traders. Actually, my channel is only 18 months old, which is a fraction of one market cycle. Most of my content isn't even old enough to qualify for long-term capital gains yet. I know it can be really scary to see all the bad headlines and all the red in your own portfolio, especially if you're a newer investor and this is your first time going through it. Trust me, every investor goes through that. That's why taking the emotion and the timing out of your process is important, and that's why I focus on data-driven investing. So, whether you work for a fund or a family office, whether you're managing dozens of retirement accounts or just your own, whether you're long high-tech growth stocks right now or you're short, now you at least know what the leading fund manager in this space has been buying as these stocks have been crashing over the last few weeks. Even after this latest crash, Cathie Wood is still managing over $14 billion in assets under management, so this data is really worth paying attention to. Want to know why Cathie Wood has been buying so much Roku and Teladoc? Check out these episodes next. That's how everything in this channel fits together. And if you feel I've earned it, hit those like and subscribe buttons to let me know that you enjoy seeing the data behind the channel. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.